How you doing? I'm Big D. Welcome to the show. If you're someone like me, that you have to know everything about silver and gold every minute of the day, otherwise you kind of panic about what's going on because silver and gold are so volatile, then you're going to want to hear this. Because what I'm about to tell you and walk you through 6 pieces of evidence that prove the COMEX silver price is a complete fraud. A miner just released showing that they are selling silver at $70 an ounce. Mining companies have been manipulated for multiple years. We've been talking about this for multiple videos so far, just this year alone. Now, while the paper market says $55, the Trump administration just announced that they are implementing a sophisticated price floor system for silver. The COMEX registered inventory is collapsing at 20 million ounces per month. And mathematical model shows the vault hits zero on March 6th. March 6th, 2026. That is 15 days from now. 15 days. This is exciting. So if you're interested in buying silver, if I was you at least, I'm not telling you to run out and do this because I'm not anybody special, but I do a lot of research and I believe I'm up on what's going on with silver as well as anybody. But if I were you, I would find the amount of silver that I'm looking for as soon as possible. Now, let's focus on and let me show you exactly what is happening. Because by the time I am done, you're either you're going to be panicking to go out and buy silver, or you're going to close this video and pretend you never heard anything that I had to say. And if you choose option 2, do not come crying to me when silver hits $200 an ounce and you're still holding paper that they call US dollar. US dollar is worthless. I've talked about this multiple times. I've proved that. If you'd like to go, I'm not going to show you. I just like to talk, so that's why I come on and use primitive video and audio to tell you things like this. It is up to you to go to those websites that I talk about to prove to you that the US dollar is worthless. It's more than 97% gone. Now, let's start with the First Majestic Silver. Because First Majestic just released their fourth quarter 2025 earnings report. And buried in that report is a piece of information that is so explosive, so undeniable that it proves once and for all that the COMEX price is fake. First Majestic is one of the largest primary silver miners in the world. They operate mines in Mexico. They produce millions of ounces of silver per year, and they sell the silver to industrial users and refineries. When a mining company releases earnings, they report something called the realized price. The realized price is the actual price they received when they sold their silver. Not the spot price, not the futures price. The actual price that someone paid them for the physical metal. Not a piece of paper that says they own a certain amount of silver. And in the fourth quarter of 2025, First Majestic realized price was $69.74 per ounce. Let me tell you why that number is so important. During the same period, October through December 2025, the average spot price was $55.20, the average. First Majestic sold their silver for $69.74, while the paper market was trading at $55.20. This is a difference of $14.54 per ounce. That is 26.3% premium over the spot price. That is crazy. Especially if you're a company buying from Majestic. Now, First Majestic sold their physical silver for the 26%, that more than what the spot price was through the COMEX. Not 2%, not 5%, 26%. In a normal market, they should not. This should not ever happen. In a normal market, the spot price and a realized price should be very, very close. 1, maybe 2% difference, right? So because the spot price is supposed to reflect the actual price of physical silver. Or if you're even considering gold, same thing. But we're also talking the COMEX in America. Nothing is corrupt there, right? But we are not in a normal market. We are in a market where the paper price and physical price have completely decoupled. And First Majestic earnings just proved it. They just gave us mathematical evidence that the COMEX spot price is fake. My opinion. Let's just go with that. But I think most people that are hearing this, you would agree. And if you do agree, please leave a comment in the comment section. Let me know what you think. And if you don't agree, same thing. If you like this show, please subscribe, share it out to your friends, and smash the like button. So let's get back to the spot price, right? Is it an illusion? It is a number on the screen that has no connection to the real world. Because in the real world, miners are selling silver for $70 an ounce. Not 55, it's 70. Why is First Majestic able to sell for such a high premium? Because industrial buyers are desperate. They need silver. They need it to build solar panels. They need it to build electrical vehicles. They need it to manufacture electronics. They cannot get it at the COMEX price, spot price, because the COMEX does not have physical metal. The COMEX has paper contracts. But you cannot build a solar panel with a paper contract. You need actual buyers. So the industrial buyers are going directly to the miners. They are bypassing the COMEX entirely. They're calling up First Majestic and saying, how much silver can you sell us? We will buy whatever you want. We will pay whatever you want. And First Majestic is saying, okay, the spot price is 55. We're selling ours for 70. Take it or leave it. And the industrial buyers are taking it because they have no choice. They need the metal. $70 is better than not having any metal at all, or a piece of paper saying you have metal. This is what a physical shortage looks like. This is what happens when the paper market loses credibility. The buyers stop looking at the COMEX price. They go directly to the source and then pay a massive premium. And that premium is only going to get bigger because the shortage is getting worse. Let's put this in context. First Majestic produced approximately 6.6 million ounces of silver in the first quarter. And they sold it all for an average of $69.74. That means they generated revenue of $463.9 million. This is up 169% year over year. How, how do you grow revenue by 169% by selling as much higher, by selling as much higher priced, and First Majestic is selling it much higher because the physical market is screaming for supply. Here is the key question. If First Majestic is selling at $70, why is the COMEX still showing $55? Because the COMEX is not a physical market. It is a paper market. It is a casino where banks and hedge funds bet the price without ever touching the metal. The banks that are shorting silver have every incentive to keep the paper price low. Because if the paper price goes to $70 to match the physical price, their short positions explode. They lose billions of dollars. So they keep manipulating the paper price down. They keep dumping contracts. They keep creating fake supplies. But it does not matter anymore because the physical buyers are not looking at the paper prices. They're looking at what miners like First Majestic are charging. The miners are charging $70. So the COMEX price is irrelevant. It is a lie. It is fiction. And First Majestic earnings just proved it. That's how I see it. What do you think? Leave your comment in the comment section. While First Majestic is selling silver for $70 in the real world, something very interesting happened in Washington, D.C. The Trump administration announced a major policy shift, and it is going to change everything. Under Secretary of State Jacob Hellberg just gave an interview where he discussed the administration's strategy for rebuilding the domestic supply chain for critical minerals. And in that interview, he said something absolutely stunning. He said, "We have developed a very, very sophisticated price floor system for critical minerals." Now, not a very short time ago, a few months, might have been around October, the Trump administration made silver part of the critical minerals list. I believe it's the first time in the history of America. Now, the price floor system, let me explain what that means. A price floor is a minimum price. It is the government saying no matter what happens in the market, the price will not go below this level. For example, if the government sets the price for $60 for silver, that means even if the COMEX tries to crash the price using the fake paper silver to $40, the government will step in and buy at $60 to support the price. This is massive. This is the government admitting that the free market does not work for strategic commodities. This is the government saying we are going to intervene to make sure miners can operate profitably. Why? Why would Trump do that? Why would he care about anybody? Because the Trump administration has realized something very important. If you want to build the domestic supply chain, if you want miners to invest billions of dollars in opening new mines, you need to guarantee them a profitable price. You cannot have Wall Street banks crashing the price every time a mine tries to open, because if the price crashes, the miners shut down. No reason to keep it going. If you can't be profitable, and then you do not have a supply chain, a domestic supply chain. You are dependent on China. We can't be dependent on China any longer on anything, especially critical minerals, medications, specific things that keep America afloat. So the government is implementing a price floor, and according to Jacob Hellberg, this price floor system is very, very sophisticated. Now, he did not say what the exact price is, But let me give you my guess. For one, I think it's going to fluctuate. Any day, it can actually go up and down. But I don't believe silver is going to be as volatile as it is today. You could go up $10, $20 today, drop $20 tomorrow. I think the floor is somewhere around $60 to $70. Why do I believe this? Because it is where First Majestic is selling. That is the real physical price. So if the government wants to supply or support domestic miners, they need to set the floor at the level where the miners can actually make the money. And that level, also, my opinion, should be because of supply and demand. So if you look at the actual supply out there, we normally see a year 800 million ounces. But every year we have more and more technology coming out, and we require a lot more silver just to supply demand, let alone to have a little surplus. So I think that will be a huge manipulator as well in this price floor. And I don't think we're going to see a $55, a $40, a $30 price on spot of silver any longer. That is my opinion. Now, if the government sets the floor at $60 or $70, that means the COMEX paper price is no longer relevant. Because even if the bank tries to crash the paper down to $40, the physical price will stay at 60 to 70 or even higher. Like I said, I believe it's going to be something to do with supply and demand, this price floor. So the paper market loses all power. And that's what's held the silver price at bay for multiple years. The physical market takes over, and the physical price is going to be real, no longer lies. Now, and the government is now guaranteeing that the price will not go below that certain level. This is the end of the price suppression. The decades, the banks have been able to manipulate the supply price down whenever they want. They want to dump paper contracts and crash the price, and miners would go bankrupt and the supply would shrink. I think that's another reason that keeps the supply low, because it takes out more of the miners. And again, the banks win. But now the government is saying no more. We need stable, profitable price of silver, because silver is a strategic mineral. And we cannot allow Wall Street to destroy our supply chain for short-term profits. Or we cannot be without silver for military purposes. One individual high supersonic missile that the United States has takes a lot of ounces just to protect the electronics and keep the connectivity, because nothing on Earth can take the place of silver. No, copper cannot. I don't know how many people have mentioned this, either in the comments or sent me emails telling me I'm wrong. Anybody can look up this information. Please do your due diligence so you know what's going on. So they're going to implement a price floor, and that price floor is going to act as a safety net. The price can go up, but it cannot go below the floor. And that changes everything, because it means the downside is limited, but the upside is unlimited. If you buy silver now, the worst case scenario is that it goes to the floor. Let us say $60. But the best case scenario, if that is, it could go to $100, $150, $200 or more. That's a bet. Bets are I'm going to say, to be, without going too crazy, we were just at, about a month ago, $121, $22, right, for an ounce of silver. It's back down, right, I think this morning, the last I looked, it was right around $83, $84 an ounce. Now, why is the Trump administration doing this? Why not last year? Why not 5 years ago when Trump was in office? Because the COMEX is about to run out of silver. They weren't going to run out of silver back in 5 years ago. Then if the COMEX runs out of silver, the entire financial system is at risk. And I don't mean to scare you, but this is how I see it. Let me just show you talk about some math. I'm not going to be able to show you, but the COMEX has two types of silver inventory: registered and eligible. Registered is the silver that is available for delivery. It is the metal that backs the futures contracts. If you stand for delivery, the COMEX gives you metal from the registered inventory. Eligible silver is stored at the COMEX, but it's private owners. It is not available for delivery unless the owner decides to move it to registered, right? So here's the problem. The registered inventory is collapsing. At the beginning of 2025, the registered inventory was around 200 million ounces. Today, it's approximately 89 million ounces available. This is a drop of 111 million ounces in just over a year. 111 million ounces drained. And the pace is accelerating. In the last few months, the COMEX has been losing about 20 million ounces per month from registered inventory. 20 million per month. Now let me do the math. If the COMEX is losing 20 million ounces per month and have 89 million ounces left, how long until they hit zero? 89 divided by 20 equals 4.45 months. 4.5 months. But here's the catch. It does not happen linearly. As the inventory gets lower, the panic gets worse. More people stand for delivery. The drain accelerates. So we are not looking at 4.5 months. We're looking at maybe weeks. And some analysts are predicting that the registered inventory could effectively hit zero by March 6th. This is why I suggest, if you're interested in silver, even if March 6th comes and nothing happens, but I would suggest you go out and buy some silver that you've been considering. Because if March 6th shows up, you at least have your physical silver. What happens if March 6th comes and nothing happens? Well, you have your silver and you're good to go. But what happens if March 6th shows up and now you can't find silver anywhere? Now that is only 15 days away. Now what does effectively zero mean? That means that the inventory is so low that the COMEX cannot fulfill delivery requests, even if there are technically a few million ounces left in registered. If there are delivery requests for 10 million ounces and the COMEX cannot deliver, they are functionally out of silver. And when that happens, they have to declare force majeure. They have to admit that they do not have the metal. They have to cash settle the contracts. And when they do that, the paper market dies. The price explodes because everyone realizes the COMEX was a fraud all along. Most everybody that comes to my show or any of the others, or has been a stacker for multiple years, I am sure most of us know exactly what's going on. But this is the type of show for someone who's just starting out. Or maybe you're just oblivious and you don't know. But I'm going to tell you. and you should keep coming back because I usually have quite a few of these shows a week. Now, what about the eligible inventory? They cannot just move some of that into registry, or the registered section. And the answer, no, they cannot, right? They cannot because the eligible inventory is from private owners. Those bars belong to people, and those people are not moving their silver to registered. Why? Because they can make more money elsewhere. Specifically in Shanghai. Right now, silver in Shanghai is trading at a massive premium to the COMEX. The Shanghai premium has been a high of $15 to $20 over spot in COMEX, at the COMEX. So if you own silver sitting in the COMEX eligible inventory, why would you move it to registered to help the COMEX deliver at $55 to $60 when you can ship it to Shanghai and sell it for $75, $80? You wouldn't. So the eligible owners are pulling their silver out of the COMEX and shipping it to the east to capture the premium. And that is why the eligible inventory is also dropping. So the banks cannot count on eligible to save them. Eligible is leaving. Registered is collapsing, and the COMEX is heading towards zero. And March 6th is the projected date. Now, I want to be very, very clear. March 6th is not guaranteed. It is a projection based on current drain rates. If the drain slows down, the data could be later. If the drain accelerates, the data could be even sooner. But the key point is this: the COMEX is running out of silver. That is a guarantee. It is at the lowest in COMEX history. And it is happening fast. And that is why the Trump administration is implementing a price floor now, because they know what is coming. They know the COMEX is about to fail, and they need to make sure that when it fails, there is a safety net, a price floor that prevents total chaos. Now, here's what I expect to happen in the next few weeks. This is my preview. The banks are trapped. They are short. They're losing money every day. The price stays high. And they know that on March 6th or sometime around then, the COMEX is going to run out of silver. So what are they going to do? They're going to try one last desperate move. They're going to try to crash the paper price. Specifically, they're going to do it at the end of the month. This is my belief. End of the month is when traders close out positions. It is when options expire. It is when the charts get painted for technical analysis. And the banks now, they know this. They're going to dump massive amounts of paper contracts in the last few days of February. They're going to try to push the price down to trigger stop loss orders, to scare retail investors into selling, to making the charts look bearish, so that when March starts, people think the rally is over. This is a classic manipulation tactic, and I'm warning you, do not fall for this. If the price does drop $10, $20, $30, I don't care where it goes, the last week of February, it is not because the demand is gone. It is because the banks are desperate. They are trying to shake you out before the COMEX fails. So when you see the price drop, do not panic. Do not sell. In fact, if you have cash, buy more. Buy that dip. Because that drop is going to be the last buying opportunity before the explosion. Let me address the people who are going to say banks can just move eligible to registered. We already talked about that. No, they cannot. We already talked about that. It is not going to happen. You can believe me. but I don't think there's any possible way. I've been proven wrong, sure. I really thought after the pullback, I thought we'd see another $100 silver. We haven't got that close. We've been close, but in the low 90s. So I will say that I was wrong there. But we're still huge percentage above what we were June of 2025, where we were only $30 an ounce. Look at where we're at even today, even with the pullback. People have made money. It depends on how much silver you have. You've probably made a lot of money. Now the banks want you to look at the eligible number and think, oh, there's plenty of silver over at the COMEX. Like I said, it's moving on. They're taking it elsewhere. The only silver that matters is registered, and registered is collapsing, and it is going to hit zero. And I think it's just a matter of weeks. Let's bring all of this together. First Majestic just released earnings showing that they sold silver at $60, almost $70, right? While the COMEX was at $55. That's a 26% premium. That proves that the paper silver is fake. The Trump administration just announced a sophisticated floor plan system for critical minerals, which includes silver as of the end of last year. This is the government admitting that they are going to intervene to support the price. I don't know why they just don't make it illegal. Wouldn't that be easier? Instead of making up another system to fix a system. Now the COMEX registered inventory is collapsing at 20 million ounces per month. And it could hit zero. Now remember, March is a delivery month. That's another thing that we'd be worried about. And if it hits zero on March 6th or even before or even after, the banks are going to try as desperate as they possibly can. And that's going to be at the very end of this month. I believe if it's going to happen again, it's going to be next week. Sounds great, doesn't it? If you're a silver stacker. All of these factors are pointing to the same conclusion. The paper market is dying. The physical market is taking over and the price is going to explode. What should you do? If you own physical silver, hold it. Do not sell it. Because if you sell it, it's going to give them a little momentum. Won't hold out. Won't hold on. People will see that they made a mistake, and they'll probably go and try to buy more. Don't get shaken out by the end of the month's volatility. The banks are going to try to scare you. Don't let them. You be the man. You be the woman. Whoever you are, show them you're not scared. You need to seriously think about converting to physical because of the COMEX declares force majeure. Your paper might get cash settled. And I hope it's not what you want. While the physical market is trading at, say, $150, you're not going to be happy. Because you're going to know at that point that silver is definitely increasing. Volatility is part of the game. But if you do not own silver yet, now is the time to buy before the end of the month crash. If this possibly happens. But this is my speculation. Even if you miss the bottom by any way, because March starts pretty soon. Once the COMEX crisis becomes obvious to everyone, the price is going to gap up and you're not able to get it anywhere. Now let me give you some historical context, because that's what's happening right now. Has happened before. In 1968, the London gold pool collapsed. The London gold pool was a group of central banks that agreed to sell gold to keep the price at $35 per ounce. But they ran out of gold. They could not keep up with demand. And on March 15th, 1968, they closed the gold market for 2 weeks. When it reopened, the price exploded. It went from $35 to $40 almost immediately. And over the next 12 years, it went to $850, a 24 times increase. The COMEX silver situation right now is very similar to the London gold pool in 1968. COMEX has been suppressing the price with paper contracts, but they are running out of physical metal. They didn't account for this. And when they run out, the market is going to close or they're going to go to cash settlement. And when that happens, the physical price is going to explode, just like gold did in 1968. So if you understand history, you know what is coming. The paper market is going to fail. The physical price is going to take over. The people who are holding physical metal are going to make a fortune. Now let me talk about the Trump administration's price floor in more detail because it is a bigger deal than most people realize. For decades, silver has been treated as a commodity, something that is traded freely in the market with no government intervention. And that free market approach worked fine when silver was just used for silverware, jewelry. But silver is not just a decorative metal any longer. Silver is a strategic industrial metal. It is used for solar panels, electrical vehicles, military equipment, electronics in military, electronics in our lifetime, cell phones, TVs, laptops, tablets. Now there's companies like Samsung coming out with a new battery that charges faster, lasts longer. Now it's critical to the green energy transition. It is critical to national security. And if you treat a strategic metal like a free market commodity, you run into problems because Wall Street banks can manipulate the price down. They can short the market. They can crash the price. And when the price crashes, mines close. Supply shrinks, and then you do not have enough silver for the solar panels or the missiles. You become dependent on foreign suppliers, specifically China, which China came out just in January and said, we're no longer selling to the West. So the Trump administration has realized that you cannot treat silver like a free market commodity any longer. You have to treat it like a strategic resource. That means implementing a price floor, a guaranteed minimum price to ensure mines can operate profitably. This is what China has been doing for years. China does not let the free market determine the price of rare earth minerals or elements. They control the price. They set the floor. They manipulate the market to benefit their domestic industry. The reason why it happens here isn't because we're dumber than China. We just have too much corruption. Corruption, everybody's got to get their fingers in there, their palms out. This is economic nationalism. This is a protectionism. This is the government picking winners and losers, and some people are going to hate it. Some people are going to say the government should not interfere in the market. Why? But here is the reality. The market has been manipulated for decades by the banks. So the government is not interfering in a free market. They are interfering in a rigged market. And they are rigging it in favor of domestic producers instead of Wall Street shorts. And honestly, I am fine with that because I would rather see American miners succeed than see JP Morgan profit from shorting silver. Now, what does this mean for the price? It means that the downside is limited. If the government sets the floor, $60, $70, the price is not going to below that, no matter how hard the banks try to manipulate it down. But the upside is unlimited because the physical shortages are real is real and the industrial demand is exploding. So the price can go $100, $150, $200, or even higher. You know, some have talked about $2,000 silver, $10,000 silver. It comes out of the ground at 7-to-1, supposedly. I don't think so. Because silver is a byproduct. 70% of the time it comes out of the ground as a byproduct. That byproduct is when they go in for copper, lead, gold, they find it alongside. It's always a lot less than whatever they're going for. If they have a gold mine, copper mine, etc., there's always a lot less. That's why mines are not found with just silver on a regular basis. But when they do find one that's majority silver, it's a big deal. Now the price floor protects you from a crash, but it does not stop the rally. This is the perfect setup for a long position. Limited downside, unlimited upside. Let me address the skeptics one more time. The people who think the COMEX is never going to fail. The people who think the banks always find a way to wiggle out. You're right that the banks always in the past find a way. But the question is, at what cost? In 1980, when the Hunt brothers tried to corner the silver market, the COMEX changed the rules. They went to liquidation only trading. You could sell, but you could not buy. And the price crashed $50 to $100. I'm sorry, $50 to $10. The banks won, but at what cost? The Hunt brothers went bankrupt. The market lost all credibility, and it took 20 years for silver to recover. So yes, the COMEX can declare force majeure. They can change the rules. They can cash settle all the contracts. But if they do that, the paper market is dead. No one will ever trust the COMEX silver futures again. And the price, the physical price, will disconnect completely. So the banks can win the battle, but they lose the war. And that is what is happening right now. The banks are going to cash settle. They are going to declare force majeure. They're going to change the rules, but when they do, the paper market dies and physical market takes over. The physical price, $70 according to First Majestic, and it is going higher. Let me know what you think. I would really like to build this show, and with your help, I believe that we can do that. If you like more of these types of videos, please subscribe and share it with your friends. Try to have a great rest of your day. Have a great weekend. And God bless.